traders, pretty good week, particularly the back end of the week after Fed. It's fairly quiet on the data front next week, so I'm just being very cautious here about what to expect. You can see I've marked the Fed day bar there and Fed day bar here. So here this had a decent effect of, got a good continuation a day or two after, and saw the winding down of that one. So if we can break through the high of this bar here, and I'll give you the actual numbers soon, then I think we could see 25.5, 26,000 and get up to this high area here. However, if we start opening and closing under this 25,000, I will get bearish and start to see some pullbacks. We're going to look at the weekly in a minute, and we have had 5 weeks, 5 whole weeks with higher closes. So 2019 has not seen a red bar in the weekly chart so far on the Dow. So that's quite something, which means, are we due one? You would have thought so, because that's quite a record. So let's drag this across and look at this a bit more deeply. So you can see how we actually had, if you look closely, a sell signal here. That's a sell. So new high, closed below on the next bar. We're under this trend line here. So if we close under here and close under 24,800 area, that means that this trend line is broken from the lows of 26th December and the lows of 28th of Jan, and that could create at least a pullback to 24,000, and 50% is all the way down here at 23,760. No real reason to short this other than the fact that this is, here's the weekly chart, there's your 5 higher closes above the 50-day average. So we punched through the 50-day average now, and so it's a positive bar, but we are under this resistance, and you would have thought that that would at least want to pull back to some of these areas down here. So I'll see which way this opens. I'll discuss that in roundtable, the impact of the potential ranges that I'm seeing on Monday. I'll be looking at the first hour's range of the Dow Open, and ultimately how that is related to the weekend range and what we might expect out of that. But just bear that in mind. So let's look at some other charts. This is the DAX on the weekly. The DAX, however, has had a lower close. So this is a new high in this little range. It's closed lower and it is struggling. You can see this big sell signal, this big weekly seller's bar here on the beginning of 3rd of December, and we've not got up there. So if we pull back to this 11,000 again, or right back down to the opening range from the first week in January, then that's 10,850 roughly. That's not that far off. There's only 350 pips off. Okay, so just beginning to see some markets that just perhaps need to rest, perhaps just need to pull back. Okay, now let's look at some bellwethers. This is China's weekly chart. So we had this, so far I've had a lot of weakness since this is January 18 when we topped out. So we're above this trend line here, so China looks higher. Japan is very flat. Nikkei is a couple of weeks of lower closes here, so we are struggling. This looks as if it needs a decent pullback to 20,000 from this level of 20,800. Pound, politics in the UK rumbles along, dragging along the floor, I think, and we see with the pound US dollar has punched into that 50-day average, closed lower, so I would expect to see that to drop back to about 128, possibly 125, and then we need to see if that can hold or continue lower. To me, what am I seeing? I'm seeing the potential for a bearish move. So here's a long, drawn out rollover through 2018, pushes higher, rolls back over, makes a new low, pushes back higher, doesn't close above these levels here, doesn't close above the 50-day average. So I'm just looking to see if that may drift lower. We're going to need some good Brexit news for this to punch up. Of course, if we pull back to 130, 128, 130, and then start to find some buyers, this could punch up. But in the meantime, the highs have sold in this, and what's interesting here to me is if we look at the Brexit bar, we are literally we've just bounced off the high of that bar. This recent high is the Brexit low of the week of the June 16. Funny that, isn't it? So let's see what that one does. Let's have a look at the euro. Euro is a pretty pathetic chart, really. By the way, we've got Bank of England rates next week. Not looking for any changes or any drama from that front could shake the pound up. Again, obvious huge sell-off. Any pullback sold, pullback sold. So we came under the trend. So we broke the trend line. This seems to be quite common these days. They either break the trend line, then go in the direction of where the trend line was threatening to take them. Pull back, eventually run up, and then 2018 just selling off and struggling potentially with this area here. So we close under this 1130 area, then we could come back to these lows. A quick look at gold. Gold's had a good week. We're range bound, we're in a huge box here. So we keep selling. Every time we get to these sort of levels, then we sell. Drift lower. Looked like a nice big punch up there, and then we just sell. Weakness, weakness, weakness. So this could see us tumble back down again, and then if we can just find some support down here, then maybe we can ride up. It's a decent close, so I just think this is a little tough. I mean, I certainly wouldn't short it. I wouldn't short it because we've had a couple of very good weeks up here, and we could so easily come and find 1360. We are currently 1370. We closed at 1317. So I think we've still got some higher to go. I'm just not convinced this is sustainable. Look at oil. Oil's had a nice technical move off this low right into that 55.55. That's a decent move. It's certainly, we had a couple of very good pushes this week. But this is a tough area for oil. I think if we come back to 52, and I suspect we might even go lower, if we can dip and hold, we might then see that pushing through towards 60. But I would want to buy a pullback, and I would want to see a good daily bar here if I was going to hold it. On the daily chart, yeah, we do seem to be running out a bit of steam here, running out of steam. It's taken quite a while. It's taken a couple of months to get up here from 42.50. So I do think we could see some lower numbers. The trap between the 50 and the 200. Every time you get trapped between the 50 and 200, you tend to see a lot of chop. And of course, the last time we tried to march up here, we rolled over, but we have closed up right into that zone. So I just think we could sort of drift a little lower and then maybe see another punch up before we get a decent pullback. Okay, so for members, I will see you at the Traders Roundtable. For others, I am talking in a webinar on Tuesday morning, and I'll make sure you get a link for that. So hopefully you can join me. Lots of other events coming up as well, so stay tuned and make sure you get in the diary, because there's a lot of exciting things happening in these markets now, and I'm going to talk to you about how you can capitalize on that, how you can protect your account, and how you can steadily build it, consistently build it, which a lot of people struggle with. So I'm going to give you some hot tips to get over some of the humps to do with trading. Alright, thank you very much for listening, and bye for now.